anything which is deducted from debtors, it is treated as liability. Any assets value have decreased and liability value have increased, you are going to record in the debit side. So partners capital account format remains same. You will be having both debit as well as credit side. Under debit side particulars, and you will draw column for each partner including retiring partner also. Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. Today we are in the 5th session of chapter 4, that is retirement of a partner. My dear students, we were discussing about this chapter and we had already solved a problem, that is 12 marks problem on this chapter, that is retirement of a partner. In today's session also we shall continue with 12 marks problem. Now go through the problem here. Varun, Tarun and Tina. Now who are the partners here? Varun, Tarun and Tina are partners sharing profit and loss in the ratio 3:2:1. Now what is their profit sharing ratio? Who are the partners? Varun, Tarun and Tina, and their profit sharing ratio is 3:2:1. So how this 3:2:1 can be written as 3/5, 2/5 and 1/5. Now 3/5 is of Varun and 2/5 is of Tarun and 1/5 is of Tina. So this is their profit sharing ratio which they have given in the question. Their balance sheet as on 31st March 2018 was as follows. That is, before the retirement they have given the balance sheet and we shall go through the balance sheet now. So balance sheet as on 31st March 2018. So in the liability side we have creditors 25,000, bills payable 10,000, bank overdraft 25,000, and we have reserve fund also, that is 15,000, where this reserve fund has to be distributed among all the partners in their profit sharing ratio. Next, they have given capital of all the partners, that is Varun 60,000, Tarun 40,000 and Tina 30,000. So the total is 1,30,000. Now coming to the asset side, here they have given certain assets like cash 20,000, next bills receivable 18,000, stock 32,000, investment 10,000, debtors 20,000, furniture 25,000, machinery 28,000, building they have given 48,000, and we have profit and loss account here, that is in the asset side. It means loss they have given in the asset side, but most of the time it will be in the liability side. It doesn't mean that it should always be in liability side. So it can be either in liability side or in the asset side. So be careful. So here profit and loss account they have given 4,000. So here what we are going to do with this profit and loss account, we have to distribute among all the partners in their profit sharing ratio in partners capital account. And total of both assets and liability is 2,05,000. So this is the balance sheet what they have given before the retirement of a partner. Now let us see who have retired. So Tina retired on 1/4/2018. Now Tina was a partner and she is going to retire on 1/4/2018 from the business, and the following adjustment are to be made. Let us see what are the adjustments to be made here. Goodwill of the firm is valued at rupees 20,000. Of course, we know how we are going to adjust this goodwill. So we have to take only the retiring partner share of goodwill, and that amount has to be distributed among the remaining partner in which ratio? In gain ratio. So this will be recorded in partners capital account. Next is maintain provision for doubtful debt at 5% on debtors. Now if you see the balance sheet, from debtors, nothing is deducted, right? But what they have told, we have to maintain a provision. That is provision for doubtful debts. So PDD has to be maintained at 5% on debtors. Now what is this PDD? As I have already told you in the previous session, anything which is deducted from debtors, it is treated as liability. So here also PDD is a liability where they have not deducted in the balance sheet, but now they are telling us to deduct. So it means what? Increase in liability. Of course, a new liability have arisen, so that the total liability have increased. So increase in liability. So where do we record this adjustment? So once we have to record in revaluation account, once we have to deduct in the balance sheet, that is from debtors. Next, increase stock by, so here they have given by, in the sense to what extent the stock has increased. It has increased by rupees 5,000. So it means what? Stock is an asset. So increase in asset. So where do we record? So we'll record in revaluation account once and we have to add in the balance sheet. Next, depreciate machinery and furniture by 10% each. So depreciation means decrease in the value of asset. So here the asset is machinery as well as furniture. Their value have decreased. So where do we record? That is decrease in the value of asset. So we will record in revaluation account once. We will deduct in the balance sheet from machinery as well as furniture. Next, they have asked us to prepare revaluation account, partners capital account and balance sheet as on 1/4/2018. That is, on the date of retirement, we have to prepare the balance sheet. That is, after the retirement of a partner. So this is a 12 marks important problem where they will give the balance sheet before the retirement of a partner as well as certain adjustment relating to increase or decrease in the value of assets and liability. So we have to prepare revaluation account, partners capital account as well as balance sheet after the retirement of a partner or on the date of retirement of a partner. Now we shall directly go through the solution. So first we have to prepare the revaluation account, write the heading revaluation account. So you'll be having both debit as well as credit side. Under debit side particulars, amount, under credit side also particulars and amount. Now what you are going to record in the debit side, I had already given you the in. So in the debit side you will record A minus L plus. So if any assets value have decreased and liability value have increased, you are going to record in the debit side. Now coming to the credit side also, so here you are going to record A plus L minus. So if any assets value have increased and liability value have decreased, you are going to record in the credit side. So in order to prepare a revaluation account, we have to go through the adjustments. Now go through the adjustment and see whether any assets or liability have increased or decreased. Now leave about the first adjustment, that is relating to goodwill. We are going to record in partners capital account. Now second adjustment is maintain provision for doubtful debts at 5% on debtors. So I have already told you provision for doubtful debt is a liability, so that in the balance sheet they have not given this provision for doubtful debt, but now they are telling that we have to maintain a provision at 5% on debtors. In the sense the provision for doubtful debt have increased or increase in liability. Now where do we record increase in liability? That is in the debit side, L plus. So write to provision for doubtful debts. Now what is or upon which we have to calculate the provision on debtors. Now go through the balance sheet. What is the debtors here? That is 20,000. So 20,000 into what is a percentage? 5%. 20,000 into 5 divided by 100. So you'll get 1,000. So this is provision for doubtful debt. It means increase in liability. Next one, increase stock by rupees 5,000. So stock is an asset. Here the asset value have increased. So increase in asset. Where do we record in revaluation account? So if you see here A plus, that is in the credit side. So by stock account, so they have directly given the amount. How much? 5,000. So if they give the amount directly, no need to calculate. We can directly write the amount in the revaluation account. Next is depreciate machinery and furniture by 10% each. Now machinery and furniture is what? Asset. So decrease in asset. Where do we record decrease in asset? That is in debit side of revaluation account. So to machinery account. Now what is the percentage? 10% depreciation to be charged on machinery as well as furniture. Now what is the value of machinery here? That is 28,000. So 28,000 into 10 divided by 100 will get the depreciation on machinery. In the same way, furniture is how much? 25,000. So 25,000 into 10 divided by 100. So machinery 28,000 into 10% will get 2,800. In the same way, furniture 25,000 into 10% will get 2,500. Now we are done with all the entries relating to increase or decrease in the value of assets and liability. As usual, we have to balance, and the balancing figure will be either revaluation profit or revaluation loss. Now, if you add all the amount in the debit side, that is 1000 plus 2800 plus 2500. So, the total is 6300 in the debit side. Whereas coming to the credit side, we have only one amount, that is 5000. So, 5000 in the credit side. Now, which side is more? Debit side is more, 6300. So, we'll record 6300 both the side minus 5000. We'll get a balancing figure of 1300. Now, see here, debit side is more than credit side. It means what? Revaluation loss. So, till now we had solved a problem where credit side was more than debit side and it is revaluation profit, but here it is revaluation loss. So, even though if it is profit or loss, we have to distribute to all the partners in their profit sharing ratio. Now, how to write? By loss transfer to partners capital account. Now, who are the partners? Varun, Tarun and Tina. What is the loss? 1300. Now, distribute that loss in their profit sharing ratio 3:2:1. That is 3/5, 2/5, that is 3/6, 2/6 and 1/6. And here also it is not 3/5, it is 3/6, 2/6 and 1/6. So, their profit sharing ratio is 3:2:1. So, it can be written in the form of fraction 3/6, 2/6 and 1/6. So, here also we have to distribute in the ratio 1300 into 3/6 will get 650. Next 2/6 433 and 1/6 will get 217. That is, the loss has to be distributed in their profit sharing ratio 3:2:1. Now, we are done with the revaluation account. Next account to be prepared is what? Partners capital account. So, you know the format. So, partners capital account format remains same. You will be having both debit as well as credit side. Under debit side particulars, and we will draw column for each partner including retiring partner also. Now, who is a retiring partner here? Tina is a retiring partner. So, draw column Varun, Tarun and Tina. In the same way, credit side also particulars Varun, Tarun and Tina. Now, as usual, first we will bring the capital of all the partners. So, how to write it as? By balance brought on. So, what it is? It is the capital. So, capital of all the partners. Now, where do we get this capital? That is in the balance sheet. Now, if you go through the balance sheet here, yes, they have given the capital of all the partners, Varun, Tarun and Tina, 60,000, 40,000 and 30,000. So, we have to take this capital as by balance brought down. So, how to record in partners capital account? That is in the credit side, by balance brought down 60,000, 40,000 and 30,000. Next, your second step is that you have to transfer the revaluation account balance. So, you had already prepared this revaluation account and the balancing figure will be either revaluation profit or revaluation loss. In this problem, it is revaluation loss. And we had transferred to partners. Right now, we have to take this revaluation loss to the debit side. So, how to record? To revaluation account and record all these amounts 650, 433 and 217. So, how to record? That is to revaluation account. So, what it is? It is loss 650, 433 and 270. Next, as usual, we have to check whether there is any reserve, fund as well as profit and loss account in your balance sheet. Now, go through the balance sheet. So, see the liability side, whether there is any reserve fund as well as profit and loss account. Yes, there is a reserve fund here. That is reserve fund 15,000. Now, distribute this reserve fund to all the partners in their profit sharing ratio. Now, why it has to be distributed to all the partners including retiring partner also? Because he or she is also a part of this reserve fund. So, it has to be distributed to all the partners. So, how to record? By a reserve fund 15,000 into 3:2:1. So, how to record? So, by reserve fund 15,000 into 3:2:1, when you distribute, you will get 7,500, 5,000 and 2,500. So, this is about reserve fund. Next, coming to the asset side of the balance sheet, I had identified profit and loss account as an asset. Right? If you go through the balance sheet here, yes, we have profit and loss account. We have to distribute this 4,000 in the same way as that of reserve. Clear? So how to record? Now this is there in the asset side. So it means what? It is loss. So we have to take in the debit side of partner's capital account. So how to take? So 2 profit and loss account, 4,000 into 3:2:1. So we'll get 2,000, 1,333 and 667. So this is about your third step. You have to check whether there is any reserve, fund as well as profit and loss account. If you find any such type of item, you will transfer to all the partners in the old profit sharing ratio. Now we shall come to the treatment of goodwill as per Accounting Standard 26. So you know the entry. So what is the entry here? Remaining partners capital account data to retiring partners capital account. Now who retired from the partnership firm? Tina. Now who are the remaining partners? Varun and Tarun. So your entry will be Varun's capital account. Varun's capital account data. Tarun's capital account data to who is the retiring partner? Tina. So Tina's capital account. So this is the journal entry for treatment of goodwill. Now as I've already told you, so they will give the valued goodwill. Now if you see the question here, they have given valued goodwill 20,000. Now take this 20,000 and calculate retiring partner's share. That is into Tina's share. So Tina is a retiring partner. So if you calculate, you will get the amount. So that amount has to be distributed among the remaining partner in which ratio? In gain ratio. Now we shall go through the working note. Yes. So the total valued goodwill is 20,000. What is retiring partner share? That is Tina's share of goodwill is 1/6 because their profit sharing ratio is 3:2:1. So this is of Varun, Tarun and Tina. So Varun share is 3/6, Tarun is 2/6 and Tina is 1/6. Now Tina has retired from the partnership firm. Her share is 1/6. Now we have to take, they have given the valued goodwill 20,000. Tina's share of goodwill, that is retiring partner share of goodwill is 1/6. Now we have to calculate what is her share of goodwill. So retiring partner share of goodwill is 20,000 into 1/6 will get 3,333. So this is retiring partner share of goodwill. Now it has to be distributed among the remaining partner, that is Varun and Tarun, in which ratio? In gain ratio. So it has to be distributed in gain ratio. But in this problem, there is no other information to calculate gain ratio. So we will take retiring partner share. So the remaining share is how much? 3:2. So it can be written as 3/5 and 2/5. Now this amount has to be distributed in which ratio? That is 3:2 ratio. So when they distribute, so therefore Varun's share of goodwill, not capital, Varun's goodwill. So Varun's goodwill is how much? 3,333 into 3/5 will get 2,000. In the same way, Tarun's goodwill. So this is Tarun's goodwill, that is 3,333 into 2/5 will get 1,333. Now we shall record this amount in partner's capital account. So how to record? We know the entry, that is Varun's capital account, Tarun's capital account data to Tina's capital account. Now write by Varun's capital account, write the amount, that is Varun's share. How much? 2,000. In the same way, Tarun's share 1,333. So other part of this entry is Tina's capital account. You will write amount in Varun's column 2,000 and Tarun's column 1,333. So be careful while writing the amount. So here if you are writing Tina's capital account, you will write amount in Varun's and Tarun's column. If you are going to record Varun's and Tarun's capital account, you are going to write the amount in Tina's amount column. So this is the treatment of goodwill as per accounting standard 26. Now we are done with this. We will balance both the side. First we shall balance the amount of retiring partner. So retiring partner is Tina and her balancing figure has to be transferred to her loan account. Suppose they have given in the question it has to be paid in cash, then we shall pay in cash as to cash account instead of loan account. Clear? Or else we will directly transfer to loan account. If nothing is given, if any information is not there about payment to the retiring partner, in such cases we will transfer to his or her loan account. Now if you see the debit side of Tina, now we shall calculate that of Tina. So Tina is a retiring partner. In the debit side the amount is how much? 217 plus 667. So here the debit side is less than the credit side. Now coming to the credit side, we have 30,000, 2,500, 2,000 and 1,333. So the total is 35,833. Whereas in the credit side we have only 217 and 667. So what we'll do? The greater amount, that is in the credit side, is more. So we'll write 35,833 both the side in Tina column minus 667 minus 217. So we'll get a balancing figure of 34,949. Now, as I've already told you, the balancing figure of retiring partner has to be transferred to her loan account. So we shall transfer this amount to her loan account as to Tina's loan account. So this is the balancing figure. Now here it will be dash. Clear? Now in the same way calculate that of Varun and Tarun and their balancing figure has to be carried down. Now if you see the debit side of Varun. So what is the total? 2,000 plus 2,000 plus 650. So it is 4,650. Whereas coming to the credit side of Varun here, 60,000 plus 7,500. So the total is 67,500 in the credit side. Now 67,500 is more, right? 67,500 both the side minus 4,650. You get a balancing figure of 62,850. Now what it is? It has to be carried down because these two partners are going to continue in the future. So it has to be recorded in the balance sheet. So this amount has to be carried down. In the same way that of Tarun. Now if you add all the total in the credit side of Tarun, it is 45,000. Whereas in the debit side it is less. So write 45,000 both the side minus 433 minus 1,333 minus 1,333. You will get a balancing figure of how much? That is 41,901. So what it is? It is also balancing figure. We have to carry down that balance because they are going to continue in the future. Now whatever the amount you have carried down. So the amount of remaining partner. So this amount is what? It is the balancing figure. So you have carried down that amount. Now what you will do? You will, whatever the amount you have carried down, you have to bring down that balance. As by balance brought down 62,850 and 41,901. Whereas retiring partner, she is not going to continue. So we are not going to carry down her balance. Next we will prepare what? Balance sheet. So we shall prepare balance sheet, that is on the date of retirement of a partner. So this is simple. You have to refer your old balance sheet which is given in the question, and if there is any adjustment we have to adjust. Other than that the amount will remain same. So write the heading balance sheet as on 1/4/2018, that is on the date of retirement. You will be having liabilities, amount, asset as well as amount. Now let us see what is the first item in the balance sheet that is given in the question. So the first item is cash. So normally the cash is not affected during the retirement of a partner. So we'll record the same amount. How much? 20,000. So cash 20,000. Next item is bills receivable. So there is no increase or decrease in bills receivable. We'll write the same amount 18,000. And the next one is what? Stock. So let us see. So stock 32,000. And see the adjustment here. So they have given what? Increased stock by rupees 5,000, in the sense what? Appreciation. So we have to add that 5,000. So how to record? Stock 32,000. Add appreciation. How much? 5,000. So you'll get 37,000. Next item, that is investment. So there is no increase or decrease in investment. It means that it remains same. So same amount has to be recorded in the closing balance sheet also. So investment 10,000. Next one. Next we have debtors 20,000. But there was a provision for bad debts. How much? 5%. So we had already calculated. So it is 1,000. So we have to deduct that 1,000. So how to record? Debtors 20,000 less 5% provision. So it comes to 1,000. We had already calculated. So if you deduct, you will get 19,000. In the same way, next item is furniture 25,000. Let's see whether there is any adjustment. Yes, there is a depreciation of 10% on furniture. So what is 10% on furniture? 2,500. So we have to deduct that 2,500. So furniture 25,000, 10% depreciation minus, so that is 2,500. So the total is 22,500. In the same way, next item is machinery 28,000. Let us see. Yes, there is a depreciation at 10%. So 10% is 2,800. So we have to deduct that 2,800. So machinery 28,000 less 10% will get 2,800. So if you deduct that, you'll get 25,200. And the next item in the balance sheet is building 48,000. But there is no adjustment relating to building. So we will write the same amount. So building 48,000. And the next item is profit and loss account. So we are not going to take profit and loss account in the balance sheet. We had already transferred in partners capital account among all the partners in their profit sharing ratio. Now come to the liabilities. So we have creditors as well as bills payable, bank overdraft. So there is no adjustment relating to all these three items. So we will record the same amount in the balance sheet also. That is in the closing balance sheet. So creditors 25,000, bills payable 10,000, bank overdraft 25,000. Next item in the liability side is reserve fund. So we are not going to record reserve fund in the balance sheet because we had already recorded in partners capital account and we have distributed. So no need to take the reserve fund. Next we have capital. So we are not going to take this capital because in partners capital account we had already recorded. So as by balance brought down. So we are not going to take this capital in old balance sheet. That is on the date of retirement of a partner. Then which capital has to be taken? The balancing figure of partner's capital account has to be taken as capital. That is only of remaining partner. Then what about retiring partner? Retiring partner's loan account has to be taken. Now go through partner's capital account. Yes, here there is Tina's loan account. Now this amount has to be taken. That is 34,949 in the liability side of the balance sheet. So how to take? That is Tina's loan account 34,949 and remaining partners balancing figure will be taken as capital. That is Varun and Tarun. Now if you see the amount here, the amount we have carried down. So this amount has to be taken as capital 62,850 and 41,901. So Varun 62,850 and Tarun 41,901. Now we are done with this. So there is no more other entries. So we have recorded all the adjustment twice. At the same time, we have recorded all the items once which was there in the balance sheet in the question. Now we have to balance both the side and the total of assets should be equal to total of liabilities. Now if you add all the liability, we will get 1,99,700. In the same way, if we add all the assets, we will get 1,99,700. So this is how you are going to solve a problem where you have to prepare revaluation account in order to record increase or decrease in the value of assets and liability, and the balancing figure will be either revaluation profit and revaluation loss, which has to be transferred to all the partners in their profit sharing ratio. Next, we'll prepare partner's capital account, and here you have to be very careful. If there is any reserve fund or any other profit and loss account, here it has to be transferred to all the partners, including retiring partner also. At the same time, the balancing figure of retiring partner will be transferred to his or her loan account, and the remaining partner's balancing figure has to be carried down and it has to be shown as capital in the balance sheet. And next, we will prepare the balance sheet same as admission. If there is any adjustment you will make, that is increase or decrease, you will add or less. And you have to take, that is in the liability side, you have to take only remaining partners balancing figure as capital, and retiring partners balancing figure will be taken as loan account. So this is a very important 12 marks problem, as you know. So it is an alternative question. If they ask 12 marks from admission, then they will ask 6 marks from retirement. In the same way, if they ask 6 marks from admission, then you can expect 12 marks from retirement. So in my next session, I am going to solve a problem on retirement of a partner. So we shall solve one more 12 marks problem on this chapter, that is retirement of a partner. My dear students, hope you all understood how to solve a 12 marks problem, what are the accounts as well as statement that has to be prepared. See you all in my next session with a new problem. Till then, take care. Thank you.